Hey everyone, we're back for episode 2. In this episode, we'll be covering with Yoni Imbalanced Memes. So, to provide some insightful questions on the podcast, I've kind of differentiated these segments into first understanding what imbalanced memes are, then also talking about the creation, and then maybe some examples, personal experiences, and how imbalanced memes could impact capital markets, specifically within like alternatives such as crypto. So maybe you could, for me, imbalanced memes have been a very new topic, but they've gained a lot of traction in the past couple of weeks. Could you kind of explain what exactly an imbalanced meme is in the context of crypto and Web3 and how they affect general markets?
Yeah, so I think since I got started, like I made all of the money that I made, whether building businesses or whether investing in coins, based on this idea of imbalanced memes, but I couldn't name it until recently. And so other names for imbalanced memes could be hypes, could be, like not pumps, but I guess hype is another name. And basically, what is imbalanced meme? Imbalanced meme is an idea that have more demand than supply in terms of investments. So there is more demand to invest into this idea than there is assets that represent this idea. So basically the way investors are working is they are looking to get exposure to ideas. As you can see, for example, risk-taking is, so idea, what I mean by idea is something that is becoming a category. So right now there is, this new word called integrated, like integrated versus modular blockchains. So people are looking for solutions for scalability. It's not a new area, but all the time there is new words that create kind of new memes, new frontiers, new categories. So an imbalanced meme is a category, an idea, or a word that have more demand than supply to it. And as a result of that, the assets that represent exposure to this idea going up a lot in value, but also people that are building something like that, raising money much more quickly. So I can give a lot of examples for both, but that's what I mean. Like always try to look for an area when there is much more demand to invest in than assets that actually represent this thing.
Okay. I think that's a great general overview, and I actually have a better understanding of it now. It sounds pretty familiar to like an information asymmetry in like TradFi, or where there's a lot of asset specific hype around something. Could you kind of make a distinguishment between these imbalanced memes in the crypto markets versus what you may see in like TradFi? Or why do you think that crypto specifically is so pervasive with these imbalanced memes? Like what makes crypto specific to having so much of this?
Yeah, so I think it's liquidity. Like the number one thing that makes crypto such a good vehicle to take advantage of this imbalance memes idea is liquidity. So because things are tradable, there is no other place in the world that startups are being traded in the stock market. So I'll give you an example for an imbalance meme in the traditional market. Okay, for example, recently, Nvidia is, the stock is maybe the only stock that went up in value, or one of the only stocks that went up in value, because people want to get exposure to AI, and there is no AI to invest. Like for retail investors, like OpenAI is closed, Anthropic is closed, like all of these big startups that represent AI today is not accessible for startups. So anyone that have a brokerage account can only invest in Nvidia becoming overvalued, I don't know, overvalued, undervalued, but went up a lot in value. The multiplier went up. Like another imbalanced meme that Tesla took advantage of is clean energy. Clean energy and protecting the earth and carbon, climate and all that. So by buying a Tesla share is like getting exposure to
Carbon credits, stuff like that, right?
Yeah. So within crypto is much more interesting, because in crypto, creating a startup doesn't necessarily have to have a lot of revenues. Automatically you're becoming tradable. So I can run through history, or I can give recent examples, whatever you prefer.
Yeah. I think that's a great segue into the next segment, which is, can you provide more insights? I know 2017 and 2021 were filled with NFTs that had imbalanced memes, but maybe you could just talk about generally what opportunities some standout examples have provided you in the past, or you maybe have missed in the past.
Yeah. So first, before I run through some examples in history, I'll tell how imbalanced meme is getting created.
Mm-hmm.
First, there is an event that changed the perspective of people towards something, or there is a technology that enabling something. So I'll run through examples, but in 2017, okay, so after the event or the technology is happening, there is a new way of looking on those things, and people are looking to get exposure to this new thing that becoming in demand. And so I'll give a few examples. So 2017 ICO rush. Yeah. What was invented? The ERC20 token was invented. Like, this was the first time that Ethereum got the opportunity to print tokens. So people could use Ethereum to print tokens. And there was this new notion, like every startup can be on the blockchain, create a token. And so people were trying to invest in every startup. And so people had more money to invest, and more people on the supply side, it was covered very fast. But in 2017, people raised tens of millions or hundreds of millions of dollars because of this imbalance. And some of them succeed, some of them don't. By the way, there is a few ways to take advantage of imbalance, but I will get it in a bit. First, let's run down the history. So first, 2017, like there was ICO boom, and then 2020, someone came up with the idea of field farming, and then what happened? All of the products did this new way of distributing tokens, which on the other side got many people to invest in DeFi. The tokens went up, the price of the tokens that they gave away was higher, and people got rich, and so on, and the reverse. And that's a DeFi boom. And then in 2021, I think, or two, NFTs was ERC 721 was invented, and you could print items. Like the first, you could print tokens, then you could print items. And that's very interesting because you could sell items. People sold pictures, and that was a big deal.
Okay, so could you kind of explain how a listener could take advantage of these imbalanced memes? You said that when there are new concepts and trends, specifically within the realm of crypto, how might a retail investor or even a larger scale institution take advantage of these trends and waves and prices?
Yeah, so I guess there are two ways. One is to create a company, and two is to invest into something. So one is to create company, like you get to raise money in a much easier manner. And I can run some examples of what I did in the past. So in 2018, there was a paper called Mimblewimble. And this paper was basically described a new way to build a blockchain. And so what I did was to build this paper, implement this paper, and I basically raised $6 million to build Beam, which is a privacy preserving blockchain based on this paper. And so because this paper had some demand to invest in, but there was not a coin that represented. I raised the money and built it. Another good example is with OnFund. OnFund was a DAO that I started. I raised $7 million to it. And basically what it was based on the hype on social tokens. So social tokens had some small hype. So that's on the building side, on the founding side. Now, on the investment side, like you basically have to listen very carefully what investors want, and check out if there is a lot of alternatives. So let me give you a current example. Currently, investors are becoming obsessive again with the idea of scalability again. Now, within scalability, you can check out the Visa paper called modular versus integrated, modular versus monolithic. Monolithic versus modular blockchains. And what they discussed is basically the different approaches for scalability. On the modular front, there is roll-ups, there is data availability like Celestia, there is other types of roll-ups like Fuel and other things. But on the integrated side, the monolithic side, besides Ethereum, obviously, there is only Solana. Like Solana is basically the only alternative currently for monolithic blockchains that are scalable. So investors want to invest in scalability, and you see Solana is kind of the only one in the barbell. So it's not equal. You see, that's imbalance. So I think that's why Solana was pumping and will probably keep pumping, because investors see the value of Solana like the value of all roll-ups combined, because that's the category. It's a category leader. So I like when things are category leaders, there is only one thing in the category, because, there is no alternative.
Yeah.
Another example is, it's not exactly the same example, but I believe it's similar. ENS. So it's not a good example because domain names are not in balance in terms of the demand, but the deepin. Take, for example, the area of deepin. Decentralized physical infrastructure currently ramping up the demand. There is more and more demand for coins that represent deepin. Yeah. Now, if you look at what are the actual coins that are in the market, there are only two, Render and Helium. So that's why Render and Helium already went up, will probably keep going up. Why? Because there is an imbalance between the demand and supply, and they are the only one to absorb this thing. So I think as a investor, you just need to speak with other investors and ask them what they are interested in and why. If you get the same answer, that's a demand. And then you look on the supply and you see if in the supply side there is enough of stuff. If there is 1 or 0 or 2 maximum, then it's an imbalance area. And I feel like if you are so let's give the listeners more alpha for what to build, right? More alpha for what to build. If you are an entrepreneur, want to raise money today, there is 3 areas that I think are imbalanced memes. One is risk-taking. Second is FHE. And third is what's called inference. So right now, there is only one competitor in each area, and you can create the next one and raise money very easily. So in the inference sector, there is only one project that raised money on a $300 million valuation called Origin that does inference. Investors want to get exposure to inference, but they can't because that's the only thing that exists. Now, FHE, you have Zama that built the Zama, and then you have Phoenix. So Phoenix is the only one that built the layer 1 for FHE. If you build another thing on Zama or other cryptography primitives, you raise money very easily, probably if you are talented and all that. And then risk-taking. There is only one eigenlayer. I'm not saying that forking eigenlayer is a good idea, but maybe forking it to multi-chain, maybe building something on top of eigenlayer. Eigenlayer opens up a lot of opportunities. Eigenlayer, for example, opens up the opportunity of building a Solana with the Ethereum nodes. So you can create a Solana that is more decentralized from day one. You can create a layer 1.5, meaning that the layer 2s will be between you and Ethereum by building on the Ethereum nodes. So if you're an investor, look for things like, the example that I gave. If you're an entrepreneur, look for areas that are completely empty blue ocean, and you'll raise money more easily. So I think in both ways, it's very helpful to look on Imbalanced Memes. It helps you to understand the dynamic of investors, and based on the dynamic of investors, you know what's going to pump, and you also know how to raise money, because investors want, no one is giving to them. And I feel it's like a hack of, like, to understand things in that way is kind of a hack, both as an investor and both as a builder.
Yeah, I kind of want to touch on this specifically as you've had both technical experience as a founder and also as an investor. What is the decision-making process between those roles? Because I know that you mentioned in a previous piece that being an operator can lead to some serious stagnation. Can you provide some insights and potentially challenges in trying to capitalize on these imbalanced memes as a founder, and then kind of versus potentially, like, in my opinion, what seems like the less frictionless route of being a funder or like an investor?
Yeah. That's a good question. So, like, I feel that the areas where my creation was successful was cases that there was a co-founder from day one. Like, I feel that creating a company for someone that is not a good operator, or someone that don't like to operate, but rather like to do business development, strategy, fundraising, these kind of things, could be a pain. And so if you are deciding to create something, you need to have a co-founder from day one.
Okay.
And so with Beam, I had someone to build it from day one, and it was his vision, not mine, and everyone was great. But some of the other stuff, I had to do it. And because I like these things less, it had less success because I had less motivation for it. So when you're a founder, it's very important to know your weaknesses. If you know your weaknesses, then you can structure the thing in a good way. Like, Imbalanced Meme will help you raise money. Imbalanced Meme will also help you create community, but Imbalanced Meme will not help you build the product in a good way. For that, you need someone that likes to build products and like to manage people and so on. So I think you need to have both as an operator, but as an investor, Imbalanced Meme help you a lot to achieve everything you need, because if you know how to sense, like, the spirit of people, then it's enough. You just need to look for demand. This is the spirit of people. Look for supply. This is what exists. If you understand there is not enough exist for that demand, just invest in whatever exists, and then you'll be happy. But if you're creating something, don't pay a lot of attention to your weaknesses, because otherwise you'll feel that
right?
You're not having fun. You're just having less fun.
Yeah. I think that's great, especially like trying to co-found something is very hard to remain motivated if it's not intrinsically motivating for you. Could you kind of delve into, so you spoke recently about two papers, one that you turned into a startup of your own and another that you're actively looking into. Could you kind of provide like a generalized framework for how you're identifying these imbalanced memes so that people can take advantage of this alpha, whether that's for building or investing? Because I know Twitter, like, for example, is like, realistically, there's so much information out there that it's hard to sift through. And there are all these narratives that are very difficult.
That's a good question. Okay, so So the way I identified it was to so I'm very connected to the space. It's very hard to know these things if you're not connected. But if you're connected, you read blog posts, you read tweets, and you start to understand the bubbling around the topic.
Yeah.
Like, for example, 2 years ago, 2022, beginning of 2022, ZK. People writing in Twitter a lot of ZK. If you have a good list of people and you sift through every day, you're starting to notice the patterns. If a few days in a row, if a month in a row, 2 months in a row, you see the same words, then this is bubbling. Like, so you see the bubbling. That's the first thing. After you see the bubbling, you are trying to invest in this thing. Like, you're trying to research what exists in this bubbling and what's the use cases. So you're looking for use cases. If you don't find use cases, that's a good sign. It means that it's probably imbalanced. Yeah. If you find a lot of things, maybe imbalanced, maybe not. So first thing, I look at Twitter. I look at blogs. I see bubbling. After I see bubbling, I see what exists. I'm looking to invest. If I'm not able to invest in good things, that's good, because then there is opportunity to create something. So for example, Matchbox, the way I created Matchbox was, I saw ZK. I saw, okay, what's the use case of ZK? Games. So, okay, what games? No games. No games exist. Okay, I want to invest in something where there is nothing to invest. And so I created Matchbox to have exposure to games. Same thing with Beam. I want to invest. There was nothing to invest. I created. Same thing with the social tokens. Same thing with other things. And so I feel looking for something that have demand, people talk about it, looking for what exists and what the use cases. If you're able to, if you're not able to find a lot, it's a good sign. Yeah. And then create something yourself, because if you want to invest and you don't find, I mean, others also want to invest and they cannot find. So I think to go through that process every day is probably a good way to go. And obviously to speak with people, asking people, investors, specifically investors, like asking investors, what are you bullish on? And they are telling you, now I'm bullish on FHE. Yeah. What exists in FHE? I'm bullish on AI inference. To ask them, what exists on AI inference? Did you invest in something? Not. Why not? Why not? And then they are telling you, because there is nothing to invest in, or because the only thing is expensive for us. Then you know that if you give them something better, they will take it. You know, like, so I feel like this is kind of a thought process that I'm going through.
Okay. I think just as like a personal question as well, I'm quite interested in how you built these startups, specifically if they're completely new territories for you and other investors. Can you kind of explain, like, in addition to finding a good co-founder, how you actually went out and built these endeavors? Because this is like something that's very hard to do, obviously, especially a space that, like you said, there was nothing to invest in, so just create it yourself.
Yes, but more. So something exists. So if you take, for example, inference, or if you take for example, deepin, like the general idea, FHE general idea exists.
Yeah.
So you kind of need to ask investors what are their use cases that they think are valuable. And then they are telling you, we think that is valuable or that is valuable. And you're just building what they think is valuable, like the best thing. So what you need is a clear product and good people that are very energized about this product. So I think the product is also clear. Like if you have good people, it's everything, because the product is also very clear. Because look, usually those things are already mapped out by the infrastructure builders. For example, FHE, for example, ZK, Starkware or Starknet thought about applications for ZK much before I did. So they are providing me with what to build. FHE was thought, Zama thought about FHE before, and they know what is good. Social, same, like was thought about Vitalik, was thought about by others. Like inference was thought through by many investors like Multicoin and others. So I feel that you just need to listen. You just need to listen to what investors think is a good idea, and to build that good idea that they think is good idea, and to find people that are already passionate about it before you. Because if you tell them what to do, they will not do it. Like, telling people what to do is the worst way of motivating. Worse.
Okay.
Like,
Yeah.
people are not doing what they are told. People are only doing what they want to do. So if you find people that are already interested in building those things, that would be amazing.
Okay. Yeah, I think that was like really good advice. Especially for like a young guy in the space trying to get his feet wet, specifically within building, and potentially investing. Could you kind of, as a final question, could you be a little bit more specific how people that are potentially listeners that are newer in the space rather than industry veterans can get more connected? I know that you're not a huge fan of specific channels, but rather listening to the entire community as a whole to kind of sift out what's real and what's illegitimate hype. I know we spoke previously about like objective information following and objective information sourcing. So maybe you can provide how you kind of curated list of people or investors or even mentors that you've, taken a keen eye to and you listen to for market insights.
Sure. So I think the best way for me is to pick people that are credible in a specific category and go through their following, what they are following, what they are following on, and make this as a list. So for example, if you have Kobe Gorkan is one of the most known cryptographers, most credible cryptographers. Kobe Gurk, that is a Twitter account, and I can send in the show notes or in the blog post, whatever we'll do, names of people. But what I will do is to create a list of credible people in specific areas, go through the people that they are following, make a list in Twitter, and browse through this list. That will give you a good understanding of the space. So just run through. So you have, in general trading, you have influencer DeFi list in my channel that people can go through and understand DeFi public markets. Kobe Gorkan, Eli Ben Sasson, Vitalik, or a few other people in cryptography, and ZK maybe, and stuff like that. And also other cryptographers of Scroll, other cryptographers of ZK Sync, and this kind of people. That's in ZK, right? Like liquid staking, you can follow the founder of Eigenlayer or 13-year-old VC, that is Jesse. And then you have a lot of topics. You have DeFi founders, you have other topics, but basically finding the founder that is most known in that space, and see who is following, making a list, and that's how you get the best information about that space.
Okay. Yeah, I think that was, again, like a fantastic answer. I don't think that there's a one size fits all, but it's more just about experience and talking to other people. But for people that are listening to the podcast, that's a great kickstart in terms of a starting list to kind of grow off of. But yeah, that concludes my questions on this front. Do you have any final thoughts that you want to add for Imbalanced Memes, or special advice that you want to give to the audience listening?
If anyone have a question or needs direction, help, feel free to DM me on Twitter or any other way, because I'm thinking about those things a lot, and I'm happy to help, whether builders, whether investors.
Yeah. Okay. And his Twitter will be obviously linked in the description and can be found in the Substack. But just as a summary, in this episode, we covered Imbalanced Memes, specifically with the supply and demand side of information and the lack of solutions for both investors and builders to create value in a space. So this is where someone should step in and use the available insight from investors and just the community at large to see what is required by the infrastructure to kind of make change. So again, this will be posted on Substack and other social medias. We thank you for your time and see you on next episode. Thanks.